took me a year to do my first deal. But then when I figured out how to do one deal in the second year, which is when I did this program, I did 18 and I broke the record for the most amount of money made. And everyone was like, wow, how did you do this? And for me, it was just really simple. I was like, they're like, what do you mean you're using systems? And what do you mean you've recruited a team? And I was like, well, surely this is a business and it's just property's the product.
Welcome back to another episode of the Momentum Invest Accelerate Growth podcast, brought to you by Ramsey & White. My name is Joel White. It gives me great pleasure to bring our guest today, Daniel Hill, business owner, entrepreneur. We're going to get into it today, and also my co-host, Will Roberts. So welcome both to the show.
How are we doing, guys? Good to see you, Joel. Good to see you, Will.
So my first question is, where did you start in property and how did you get where you are today, driving a Rolls Royce, making 500k on one deal?
So I started off in property as a kid. So I was 15 and went on to the buildings as a labourer for my girlfriend then's dad. And then from 15 to about 22, I was literally on the tools. But I got to about 18, 19, and I thought I don't want to be the guy actually physically building the houses. I want to be the guy paying the guys to build the houses. So I did all my trades, but then I did a degree in business as well. And then pretty much as soon as I left uni, I got going a bit more actively with the businesses. I had probably about 7 or 8 businesses by then. And then in 2011, or 2008, 7-8, we had the global financial crash. So global financial crisis, market crashed, leveled out about 2010. So I thought I'm going to jump into the industry then. And I started investing in 2011, started buying single lets, then small HMOs, then built up a portfolio of about 200 rooms, then scaled that nationally to about 1,000, then started doing development and then doing private schools and stuff like that, up to now where we've got a much smaller group of businesses now. I've probably got like 15 companies, but only maybe 3 of them I'm like actively involved in, and the rest of them are more investments. So I'm either a non-exec director or an angel investor. So they're more arm's length now. I try and work less, but still sort of earn more really. And that's 20 years in about 20 seconds.
I like that. Work less, earn more. I think
Yeah.
some entrepreneurs, I think, struggle with this. When you're starting a business, you wear many hats, and then when do you start letting go of hats or delegating and moving into different roles? And I think actually you can get a greater return on investment if you're build the business in the right way. So you might not know this, Daniel, but I first seen you speak about 7 years ago. I was in a mortgage update at Blackfriars Property Investor Network in London.
That used to be a great meeting.
Yeah, that was a great meeting. And you come along and did the keynote speak on your business journey and the property investments you're involved in. And I felt, when I was listening, I really resonated with you because you were very methodical and strategic in the way you approached your businesses. And it was quite clear to me why you were getting results, because you treated it with there's a risk involved, but it was like strategically planned out. And if I do X, Y, and Z, we will get this outcome. Obviously, there's trials and tribulations of all of that, but I felt that a lot of people that were speaking would be, I borrowed some money, I bought a house, it did go well, it didn't go well, and it's very trial and error. Whereas you just seemed a bit more methodical and strategic. Where does that come from? Is that learned? Because you have entrepreneurs who have startups, you have the scale ups, you have the exits, or someone who can do it all, which is rare, I think, but it is possible. Whereas, if that makes sense.
Yeah, 100%. So, and you're absolutely bang on the money. The property industry is either the big corporates doing the big developments, or it's your landlord sort of cottage industry. Where I sort of found this gap is, so there's a good saying Naval Ravikant says about, you want to find your bear on a unicycle. And what it means is if you saw somebody on a unicycle, you'd be like, that's cool.
Yeah.
If you saw a bear, you'd be like, wow, look, there's a bear.
Mm-hmm.
If you saw a bear on a unicycle, you'd be like, wow, that's incredible.
Yeah.
And what it is finding your 2 things that are unique to you and putting them together. And for me, it just so happened that my background was always in business. I then came into property, but people weren't really treating property investment as a business. They were treating it as being a landlord and doing refurbs and, unblocking toilets and stuff like that. And I did Simon Zucci's mastermind program, and it took me a year to do my first deal. But then when I figured out how to do one deal in the second year, which is when I did this program, I did 18 and I broke the record for the most amount of money made. And everyone was like, wow, how did you do this? And for me, it was just really simple. I was like, they're like, what do you mean you're using systems? And what do you mean you've recruited a team? And I was like, well, surely this is a business and it's just property's the product. People are like, well, I've not seen it like that. I've been a landlord for 15 years. So I think part of it was that I came into property with a business mindset. The other thing is we all have profiles. So if you use psychometric testing, you'll have a profile, characteristics, brain frequencies, and it just so happens on what's called a creator mechanic in wealth dynamics. Are you? Okay, perfect. It's the best one. So like you've got that creative head in the clouds, high frequency thinking, intuitive, visionary. Someone gives you 20% of the information, you know 100% of the answer.
Yeah.
But the mechanic bit is you're not head in the clouds, woo-woo nutty professor. You understand how to execute, and you just think in quite a logical way. So I think putting those two things together worked really well. And for people who are out there thinking that business and property is noisy and risky and challenging, like absolutely is. But the reality is like 95% of people are missing it because they're working hard, doing the wrong things. So if you think about going to the gym, like I've been going to the gym 20 years, and every session I go to, my PT, 4 times a week, he's still showing me how to do the exercises because I still haven't perfected it.
Yeah.
And I look at other people who are turning up 5 days a week, training twice a day, and they're putting all the time and energy in, but they're swinging their back around and they're doing this and they're that.
Yeah.
And working hard only takes you so far. Like you'd be much better turning up once a week and doing your workout properly. And if you want to make a cake or you want to do a workout, cut weight or make £1 million, there's a recipe to do it, which is the blueprint. And if you follow the blueprint, your chances of success are like significantly higher. And then there's the risk associated with using the right thing. So they're the things that I use to approach it. And yeah, it's just the way I've sort of gone around my life really. I find it makes things a lot easier.
Yeah. What was the biggest challenge like when you first started in property?
Probably being at the bottom rung of the ladder. So I before that I've been in business 20 years this year, and I've started and scaled and sold over 40 companies. And at the point I went into property, I'd probably already done about 10 or 12 companies. So I was actually really quite experienced and quite comfortable with business. Going into property was like starting again, and there's nothing worse for your ego or your confidence than going from being the one who knows lots of stuff to being in a room with people and I didn't know anything. So the hardest thing was how do I catch up with the rest? In order to compete at anything, boxing, wrestling, you need to know what you're doing, be experienced and stuff like that. And when I was going into property and I'd never even bought my own property, I was like, wow, how am I going to figure out all the stuff? So I just basically read every single book, watched every YouTube video, did 20 grand worth of property training courses. And then I would say over the period of probably 3 years, really figured it out and then scaled it up. So that was the challenge on the way in, not knowing what to do.
Yeah, because I noticed it, I read somewhere something about building 100 or on a mission or goal to build £100 million portfolio.
Yeah.
How's that going today? How does that look? Commercial, residential, mixture of controlling various types of property?
Yeah, so it's pretty good worth putting some context on it. So it's all about, we're all going to have these milestones of like things we want to achieve. Yeah. And it's like, first of all, it's normally what people would say financial freedom, as in you don't have to get a job. So you're self-employed, you're working for yourself. But the reality is you're probably working twice as hard as you would as an employee and you're earning half as much. So you're stuck in this thing, but you've got freedom. So you're happy to work 7 days a week. The next step after that is then financial independence. It's like, how do you get to a point where actually not only do you not have to work for the man or the woman, you actually never have to work again. And it's working up through those things. And I've got to a real, the last 3 or 4 years, I've got to a real sort of holding point where I've not really been sure what I want. So I sold my big national company about 3 years ago. Then I retired for a year because I thought I was sick of business. Then I was sick of being retired, so I came back. And I'm just sort of doing this searching. And my next sort of vision is to go up to £100 million portfolio. But I don't know. I'm not 100% committed to it at the minute. I mean, it's going well. We're in the tens of millions. Yeah. We buy private schools, commercial, development, PRS. Yeah. We do lots of stuff like that. But at the minute, it's not my North Star at the minute, if you like.
It's quite interesting. I've spoken and worked with a lot of entrepreneurs that have exited for multi-million pounds, and they always said what's the purpose afterwards? Because you don't want to be, that person that sold a business and always thought I sold that business, but then you haven't gone on to do anything else. What drives you? And I think there are some companies that plan, say CEOs or MDs, their exit over 18 months, say they've been in the company 20 years. they have like an exit program, like in 18 months you are retiring or whatever. So how does that look? And I think a lot of entrepreneurs don't have that luxury or even think about what it looks like after exit, because you've spent all that time, build, I'm going to sell, and then it's like, oh, what next? So it's good to have the milestone, but then it's also important to understand why are we doing what we're doing to make it kind of relevant or important to us, I guess.
A big bit of wisdom that I had from that experience, which caught me out, and I'll say this, and everyone's heard it before, and I suspect it will still catch them out, is, you know, the cheesy motivational quote on the wall, it's the journey, not the destination.
Yeah.
But I was so fixed as a kid. Like, I think I came from very humble beginnings, needed money, needed to do my thing. And I was convinced when I got to this top of the mountain, had this big pot of gold, everything would be amazing. And the reality was that was all that mattered to me. And when I got there, it was the biggest anticlimax I've ever had. And I really felt lost for a while. And I think I'm probably only just coming out of that experience. So it's like, if you're doing it for money, it's, but the wisdom is, it is the journey.
Yeah.
I look back now on the early days when my house was the office and converted my spare room, then the second spare room, then the lounge, and like, I look back and think, oh, it was incredible. But in the moment, I would have been stressed. I'd have been like anxious. I've been like, my life depends on it.
Yeah.
But the reality is, nobody actually cares. You think everyone cares about your success and your failure, and like everyone's watching you, and they're sitting at home worrying about what you're doing, sort of thing.
Yeah.
The reality is, nobody cares.
Yeah.
Like it's your own game. Life is a single player game. So it's. But yeah, I'm absolutely on board with what you said.
That's so interesting, Zach. It's like humble beginnings myself, and got this deep desire to drive to be successful. What does that mean? Who knows? But you know, just keep pushing, right? Relevance, financial independence, whatever. But you do have that. Okay, I've gone here, right? I'll go there, and you keep it. But my younger brother, who worked in the business for a bit, and was like, oh, it's not for me. I can't keep it up. Like he said, you know, why? What's the deal with all these clients? Like contacting me all the time. I was like, oh, because they're clients and they pay us money to do them the service. And he said, oh, why don't I speak to my friends that much? You know, his mindset on like just like business and that side of things. I think maybe you're not the right fit, but he's now like, he loves traveling and going and doing his own thing. So we're just very cut from different cloths, but he doesn't care about what I drive or what business. He's just happy if I'm happy. So we have very different, we come from the same background. So it's really interesting that, and I kind of self-discovery and kind of on that journey of like what makes us tick in.
Do you believe in any like the woo-woo stuff, like spirituality or like astrology or star signs or the soul or anything like that?
Over the last 5 years, I've been in the trenches in the business, and I say that, you know, I'm on the front line, I'm also the general, I'm the sniper, I'm all of that, if you looked at it like that. So I haven't really had a chance to step outside of that. So the only thing I'd say what I've done is focus on my health more. So like, how can I be more efficient in my business? Well, if I'm in better health, body and mind, then I'll be more efficient and I can lead by example. But as I go down that health journey, it does make you think, okay, how do I find more balance within myself and within business? So start like asking better questions and just connecting with better people really in that space. But I'm open-minded, yeah.
You know, talk about like psychometrics of like, you've got different profiles and personalities. When you get into like, when you've made your money and you find this, or you get to this next level of whatever it's going to be for you, selling a business or hitting whatever your next target is, and you end up at the top of the mountain on your own, a little bit lonely. That's probably one of the soul searching periods you go through. But in there, it talks about how old your soul is. So it's like, again, this is not for you if you're not into like woo-woo stuff, but someone like your brother who's into living the good life, enjoying the journey, drinking milk out of coconuts. I'm looking at that, I'm like, fuck that. I'm like, there's no way. I'm maybe for an hour, but you know, I'm ginger and I'm going to be on a lightweight. I'm going to be hungover and sunstroke. But travelling souls are here to enjoy the journey and everything's fun and it's like, yeah, this is great. Or young souls. Whereas old souls have been here so many times. We're not interested in the fluff. We're like, we're here to make things move. Let's grow. Let's push things forward. Let's go. We're like rallying the troops.
Yeah, so it's really interesting. Yeah, Jordan is definitely a young soul. He literally messaged me earlier, saying to the guys on camera, "You coming to Shambhala Festival?" I thought, you know, I don't know. It sounds great, but I got things to do. But just on that point about selling the business, did you have business partners involved? Like, how did you make the decision to exit, and then what did that look like if you had other business partners and that journey? Because where we've gone on, I brought in business partners within the business, and it's been interesting because you talk about personalities. We're very different we work very well, but we are very different. So aligning the vision, the mission, and where we want to be it's taking work in itself. If that makes sense.
Yeah, so probably going to be one of the longer answers, and I think a few things to pick out. Like one is the fact that you're all different in the business is the best thing, not the worst thing. So it's like if you're all the same, you laugh at each other's jokes, you have a great time on a whiteboard at a strategy day once a year,
Yeah.
but actually getting anything done, it would never happen.
Mm-hmm.
So having all profiles covered is just an absolute essential. But then as far as the top of the mountain goes and the North Star, like what we talk about in all of our businesses and also on Property Entrepreneur is all compasses point north. So it doesn't matter what window you're looking out of, data, sales, marketing, whatever, ops, all compasses point north. So every single team member is driven on that same vision, and that collective energy drives it that way. Where we see it go wrong is where you've got business partners, one of them wants to go and drink mojitos and bottomless brunches and the other one wants to work 24 hours a day.
Yeah.
It creates issues, right? So there's like a few things there. As far as the journey I went on, it was very clear. So it was like, it wasn't always completely planned, but it was like one of our company values, which is my personal value as well, is growth. So we constantly want to be growing, learning more, getting bigger. I'm not so much of an empire builder now, but I used to be. Like in my head, I wanted to be self-employed, like we talked about. Then I wanted to have a business where I didn't have to do the crap jobs. So I wanted a PA and a bookkeeper and a salesperson and lettings managers. And I got there and had that look nice. Then I wanted multiple offices, so we went to 3 offices. Then I wanted a national company with a big head office, so we went from 400 units up to 1,000 units. We had a head office in Nottingham. We had 8 offices around the UK. And then that was my itch scratched, if you like. And up to that point, I was talking to somebody about this recently. When you're really driven to achieve something, you don't care how painful it is. So if somebody wants to run a marathon, they'll go out and they'll put the miles in, they'll do the running every night, things like that. If somebody wants to cut weight or wants to do a marathon or says they want to do it, or their mate signs them up, but they don't actually want to do it, they'll never actually get it done. And on that journey on the way up, it's always painful. It's painful, it's risky, it's challenging, it's stressful. But for as long as you're driven, you'll put up with it. When I got to the point where I'd already made my money, I was making multiple 7 figures over here on half a day a week, but then I had this big noisy national company with HR departments, line managers, 7-figure insurance policies. You're just like, it's not fun anymore. This isn't what I signed up for. All my mates have left, all my family have left, and I'm like, this is actually pretty crap. I owned it and I held it, but it was just such a noisy business. I used to run it on 1 day a week, but it was like the most amount of time and work without the pay. So like return on investment was significantly lower. And we had that going into the pandemic, and then we had lockdown, and I did a fair bit of lockdown over in Tenerife because like travel laws are okay, and if you're going to be locked down, might as well do it in the sun rather than in England in the middle of winter.
Yeah.
So I was in Tenerife, and we had a call from the head of property management saying, "I'll just let you know, 3 of the team have handed their notice in. It was only a department of 5, and they're looking after 1,000 rooms between them." And I said, all right, fair enough, we should be okay, we'll get on with it. And then the next day, the head of property management handed his notice in, and I was like, okay, right, now we've got a problem. Yeah. So I had to think about it. Spoke to my business partner at the time, and said basically got 2 options. Either I do literally a 90-day fire sale, and we sell the stock, and we just take a hit on the price, or I need to get on the first plane back tomorrow and do a turnaround. And we both slept on it, and I woke up and I thought, I'm not one to just bail, so I thought I'll get on the plane, jumped on the plane, went back, and literally sleeping in the office. This is only like 4 years ago, sleeping in the office, back in the trenches, like working with the team, turned the property management team around, and that took me about 10 weeks. And then after that, I was like, there's no way I'm ever doing that again. So after that, I put it up for sale, sold it, and it was just an easy decision. It was like, the fund was gone. Back in the day when we had it, it was making 40% profit in the beginning. Tenant fee ban, scale, management costs, more competition. By the time I sold it, it was making half the money that it used to, half the margins, and it was probably 2 or 3 times more. I wouldn't say challenging because I had a team that ran it all, but it's not. You don't want to have that in your portfolio. It was very difficult. Imagine how hard it is to run 10 HMO rooms. Imagine having 1,000 across 7 cities. It's like, yeah.
Well, when you exited, was that a relief? Because you mentioned saying like, actually, I felt a bit low when I sold one of the businesses. Was that business we're talking about?
It was probably more the anti-climax of getting to the top of the mountain, of like being there and having achieved everything I ever wanted. And I had this false expectation. They say happiness is the difference between your expectations and your experience. My expectation was that it was going to be popping champagne corks. I've made it, look at this. But actually my experience when I got up there was like, it was just that anti-climax. And then I looked back and realised that I looked back and see all my mates down the mountain, my family, the people that I'd shared the journey with. And I was like, actually, do you know what? That was the fun bit.
Yeah.
And it's easy to say when you've got money, they say money can't make you happy. Money can reduce your unhappiness. Like it'll really stop you from being unhappy. You won't go hungry. You don't have to worry about the bills. You can travel. You can do whatever you want. It reduces unhappiness, but it definitely doesn't increase happiness. Like that's a complete different challenging journey. And you get people that make 50 grand a year that are a lot happier than people making 50 million pound a year. And that's probably actually more often the case. Somebody said to me, why did you get a Rolls Royce? And I was like, well, one was like, why not? But I was like, who else is rolling around in a Rolls Royce? So I was just like,
not many.
That whole thing, reserve the masses and do the opposite of that. I've got a Volvo that I drive around most of the time with the dogs in and stuff. But
I had a MD before, and I was going to all these meetings, and I was driving a Vauxhall Astra, and he said, "You can't be turning up in that meeting. Turn up to the meeting in that car." And I was like, "Oh, I don't care. Like, do you know what I mean? It's costing me nothing." But then when I, convinced me to get a Range Rover, and then I did suddenly feel more confident. Actually, the driving experience was a lot better. And then when I met people, it did give me an air of kind of, I guess, I felt a bit better over myself, and then I acted accordingly. So I guess he was right in that regard. Cars don't, they're not my driving force, but I do appreciate a good car, especially the Rolls Royce. You were in one the other day, weren't you?
Yeah.
What's he up to now?
It's insane.
His friends, they've done well in YouTube, and it's just like there's so many different interests in business and what you can achieve. But one of the things I wanted to ask you, Daniel, was at the end of the month we're going on the Entrepreneur's Blueprint, which is the program that you put on, and I've spoken to a lot of people that have gone in it and speak highly of it. So we were really excited about going on there.
you go, Will.
Yeah, Will's.
Oh, nice. Yeah, you love it.
Yeah.
You'll be in your element. You won't sleep for like 3 days. You'll be up networking, doing deals.
Yeah, so it's going to be great. And so from being in the group, they put us in groups already, and we started to communicate. So it's really good.
Who's your captain?
I've got
Sarah. I've got.
You've got Sarah, and I've got. I'm going to tell you now. Blueprint. Who is it? We've got Matt Dolman.
Oh yeah, he's an absolute gent, absolute legend.
Yeah, good guy. And he was just asking for team names and stuff, so we're all just coming up with random ones at the moment. But from what I can see within the group, there's people of all different levels. There's someone in there who's talking about selling multiple businesses for multiple £1 million, and there's people with large portfolios, and there's people who've had good business experience and no property experience. So those like coming into it and wanting to be in business and property with the market where it is now, what would be the message to them? Because when we started business, so we had Brexit, so we started getting loads of down valuations, and COVID and government changes, interest rate rises now. So we seem to be navigating through it and the long-term thinking. But what would you be saying to those maybe with not as much experience and going, right, I've invested in myself, I want to be in business, I've got a strong driver, but the market, everything seems to be against me doing it?
Yeah, I'd say this is the thing about entrepreneurship is entrepreneurs are the ones that rescue the economy. They're the ones that get things going. And the bigger the problem, the bigger the profit. And a recession and high interest rates are a pretty big problem. But if you think about business as a game of snakes and ladders, there's always snakes and there's always ladders.
Yeah.
But it's just in the boom time, everyone's attracted to the ladders and they're easy to climb up. They're at every corner. In the downtime, every single step seems to be a snake. The aim of the game is you want to find the ladders at every opportunity. And right now, without a doubt, it's the time to clear up. Like, if I'd have come to you as an investor, like for people who listen to this who are just starting out, and you think, 2 years ago, if they were in the market 2 years ago, every house that they spent 3 weeks stacking up, appraising, getting quotes for, they were then outbid at asking price on every single deal for about 18 months post-pandemic. And I just said, do you know what? There's going to be a time in the future where you can buy any house you want, you can discount it 10, 15, 20, 25%, and nobody else is going to compete with you. If you press this button here, I'll take you there. Which investor would not have pressed the button?
Yeah.
Everyone's. But then you move on 18 months, so we're in that spot. And of course, you only have that environment because the sentiment in the market is uncertain, interest rates are high, it's risky, property's going to crash. And it comes with all this uncertainty, but you can't have your cake and eat it. So it's like, if you understand that the reason you can do deals now, you'll do the best deals over the next sort of 6 months or so that you would have done over the last probably like 3 or 4 years, excluding the pandemic. This is that window of opportunity that comes around every 10 or 15 years that everyone says they want to get involved in. But, you know, when everyone's fearful, that's the time to be greedy, like Warren Buffett says. And when everyone's greedy, be fearful. So I'd say it's absolutely the time to make your money, but you've got to understand with high margins comes high risk. And you've got to learn to play the game. But there's so many good deals to be done.
I was speaking to Jake on the estate agency business. I said, how's it going? He said, you know, last year, year before, there were 130 inquiries on property site, and then people like climbing over the fence to try and get in there. It's just like interest rates are low, there's high demand, you can work from home to castle. And now they've seen that drop significantly. There's still buyers there. And I said, what a great time for investors. So it's like I almost answered my own question by having that conversation. You talk about needle in a haystack. Is that what investors should be looking for? Like, oh, actually, this buy-to-let can give me 20%, but actually what I should be going for is 26, 27, 30, 40% returns, and like educating themselves to be able to find them deals and then connect with the right people to make that happen.
100%. It's the whole seductive thing is, if everyone else is doing it, it's got to be great. I did a little video yesterday which said, when your barber's telling you to buy Bitcoin and crypto, it's the time to sell. When your builder's ringing you up because they want work, it's the time to buy. And it's like, that's what we're starting to see now. The seductive thing about the mass market is people don't buy what they want to buy, they buy what everyone else wants to buy. And I think Daniel Priestley said that about marketing. And it applies the same to property, because the reality is most investors are running around doing deals that don't make money. HMOs they're overspending on. They're in for 400 grand on a 250 grand resi house. It's like, because everyone's doing it, creates this sense of comfort. But it's like, you want to find the thing nobody else is doing, because all that high competition does is whilst it grows confidence, it also compresses margins. Whereas if you can go and find deals that nobody else is doing, so if I said to you about 30,000 or 3,000 square metre E-class buildings right now, in September, if this new consultation gets passed, then it's quite likely that would be permitted development. And the reality is nobody even knows that yet. If you can get in there in that first 3 months and do the deals, MA was announced in August 2021, and I bought my first site in October 2021. So it was out for 2 months. Bought my first site, paid £1 million for it, cash, in the middle of the pandemic, 30,000 square foot office block. And I've not done it, I've not even hoovered it, and I've just let it now because our planning is just taking ages. And we'll make between 750 and £1 million on that deal. But everybody else missed it because they didn't understand about MAPD. They didn't have the confidence to buy in the middle of the pandemic. And if you want to spend £1 million to make £500,000 or make £750,000, you got to understand how to play that game. And most in the UK, if you're making 10 to 15% end of year triple net profit, you're deemed to be in the country's elite. It's not like 90% of businesses don't make profit. If you're doing 10 to 15%, you're deemed to be in the country's elite. On Property Entrepreneur, we wouldn't tell you to even look at a business unless it was making 20%. Really, we want to find the needle in the haystack. I own businesses that do 25, 30, 35, 40% plus net profit. But you can't do it with every business. There's these little niche ones where, like, maintenance company. I've owned maintenance companies for maybe 8 years. And they just kick out up to 50% margin. It's just no brainer. Whereas everyone's like, I'm going to go and start a letting agency. And it's like, 8 years ago, I'd have been like, clean up, it's 40% margin prof. Now I've been like, don't even bother. Like, it's gonna be hard, it's gonna be labour intensive. Yeah, it's like, see, I know you still own one, but
Well, no, I was just about to say we've got like 154 properties under management. I'm like, yeah, just hang on, to be honest. But for us, it complements the business.
But then what you could do there, is, it depends what the stock is, is if you looked at playing the market, like one of the strategies we teach is back-to-back leasing. If you were to lease those properties off the landlord for 100 quid less than they're going to get, but they have no void for 5 years, and you can lease it onto an operator for 100 quid more than the market rent, and you get 200 quid a month for 100 units, that's like, do the maths on that. Less headache, no maintenance, no compliance, no voids.
Yeah, it's probably worth having a conversation with the landlords and just introducing like where they're at with it and you know what their plans are, letting them know what we're doing as a business and what opportunities are available. So yeah. No,
the good thing is they're easy to sell. I've sold like, I don't know, maybe like 15, 20 letting agencies, bought and sold them, and everyone wants them.
Yeah.
Because everyone's still chasing, we'll make more money when we buy another one. It's like,
That's so true. There's a competitor in that market there we're in down there, and he's gone on a rampage of just buying. He's probably got over 2,000 units now where he's gone and bought small letting agents. So maybe it's working for him, but I think they're on that. I need to buy more, but I'm not sure.
But if you think about like the market, you think about law of logic is like in a market where people are buying rather than building them. Why do you think that is? Like, why do you think he has to buy them rather than just go and win all the other landlords?
Why does he need to do that?
Yeah, just why does he? If he wants it that bad, why doesn't he just go and market for landlords?
Just I guess speed to grow, get the portfolio where he wants it.
Yeah, to be fair, I mean, buying companies is much quicker than building them. I suppose the point I was badly making was. If he's having to go out and buy them, it's because it's such a competitive market. I mean, how many campaigns can you do for landlords now that are actually effective?
Yeah.
Very few. Like it's like drawing blood, isn't it? Whereas you want to be in a market where you open the door and they're chucking keys at you.
Yeah.
So he's going and buying it because it's so competitive. The reason it's so competitive is because everyone's bottomed out their fees.
Yeah.
Everyone's bottomed out their fees, so no one's making money, and there'll probably be one guy at the end, maybe your guy.
Yeah. I told the MD the other day, I said now's probably the time to put your prices up and just deliver value. And rather than having a larger book of, unhappy kind of landlords and tenants, and it's just a bit messy, I think focus on quality of service, put the price up which is fair for you and the client, and justify why you're going to be adding value. But there's so many different streams to the business. I think it's more holistic for the end user rather than just the lettings business. But I definitely share your sentiment on letting. Me personally would be going buying lots of lettings books right now.
There are still ways to make money. I mean, we've got a couple of board members who own HMO agencies, and they genuinely are making 40% plus profits.
Yeah.
But they're using every single trick in the book. Everything's outsourced to the Philippines. Yeah. It's like everything's automated and it's running like a Rolls Royce, and they are getting 40% margin. But that's after 6 or 7 years of
figuring it out and
absolutely
perfecting it.
And they're working on. They might only be getting 10%, 12%, but it's on £400 a room, not £400 a house. You know what I mean? So it's like it scales up.
How do you stay informed with what's going on in the market? Like, do you listen to the news, watch podcasts, speak to your connections? What do you find most sort of beneficial to learn?
I think whilst my appetite for scaling big businesses and running big businesses is probably definitely on the back burner, if not gone now, I'm still like addicted to business. It's in my blood. Like my first memory of being an entrepreneur was when I was about 3 years old at Christmas. All the kids were playing with the toys, and I've got one of the boxes the toys came in. I was inside it, and I'd cut a little hatchet, and I was getting the adults to put money in here, and I was giving them chocolate coins out of here. And it's just the whole concept of money, transactions, economics, finance, just fascinates me. And I literally read it every day. I'm going into this chairman role as well. The more time I've had, the more time I just spend reading. So like, I read things like every day I read the business supplement of the Times. I read the Sunday business supplement of the Sunday Times, the money supplement of the Times on a Sunday, Money Week. I read the Bank of England website. I read the National Office of National Statistics. I just read it all, and it's just my language. And I was chatting to one of the guys I sit on board with yesterday. And he said, like, what have you been doing with all this spare time? So I've been reading financial reports. I listened to the 7.5 hours of the Berkshire Hathaway annual general meeting. And he was like, that sounds like absolute hell. And I was like, that sounds like heaven to me. Like, I love it. Yeah. So I do that. And I've been in it for 20 years. It's like, I've seen booms, I've seen busts. I also studied stuff like just basic psychology, so understanding human nature. So if you like George Soros says that the economy is not driven by monetary and fiscal policy, it's driven by what's written on the front page of the paper. And when you start to understand people's tendencies and you see the nervousness on the front page, I'm like, bang, I know where we're going, sort of thing. And it's like, it's all very, like, my mantra is like success and failure, very predictable. And I just watch what's happening and I'm like, walking around Nottingham at 8 o'clock on a Wednesday evening, every single restaurant's packed, the bars are like queuing out, and I'm like, these guys haven't realised the music stopped. You know, they're now working on their savings and they're now putting money on the credit card. And we've seen it all before. You know, 10 years ago it was like credit crunch time. Everyone had debt, etc. And it's like we've had this decade of money was free. You can have whatever you want, whenever you want it. Order it now, and it'll be with you in 45 minutes. We've lived in this consumption era, and I just have like a feel for it. But it's not just a gut fear. It's like it's the educated, tacit, like the educated, like academic knowledge, but then the tacit feeling of like having experienced it.
Yeah. Seems like you're homing in your craft as well, where you're kind of almost, like you said, it's almost like your language. You're kind of reading it daily and perfecting it and in tune with it, which has allowed you to scale, grow, sell businesses, buy, and only sit on boards. Because there's an element of trust there. What do you think makes a good board director? Because as an SME, you go from startup, founder, doing every job, then you start recruiting people, you start family members, friends, and you start getting people with experience in the industry. So you start moving into like a director role. But how do you become, like, when is the right time to let go? Or maybe if you're getting some friction from people that you should be doing more of this job, because that was your job originally, but now you're actually stepping into a director role, so really should be overseeing the sales team or stepping into a board manager's role. Like, you know, how do you navigate that with the team or with partners, if that's ever come up?
Yeah, so you've probably got like a few gears. You've got like as the business scales up, you've got the startup mode, which is like great fun. Your mates are working 7 days a week. You're drinking together. You're working together, and we would call that the Band of Brothers phase, where everyone works together, maybe even lives together, drinks together, and it's this amazing culture. And that, for me, that was like 5 years of the best. That was the best 5 years of my life, without doubt.
Yeah.
We were all passionate. We didn't really care about the money. We were having a great time. We were in our early 20s, and that was like Band of Brothers. But then you get to a point where the business has to actually turn into a business, and it's like the guys who came for the t-shirts, the trainers, the beers at 2 o'clock on a Wednesday. All of a sudden, you get your first employee, and then this is like they come at 8:30, they leave at 5:30, they take an hour for lunch, they're wearing suit and shoes, and they're sitting next to someone who's smoking a vape, wearing t-shirts and trainers, and you're like, this is starting to get a bit awkward. There's this like misalignment. And then the dangerous bit is you stay there for too long. And what you're trying to do there is basically mould. You're trying to mould a culture out of custard. It's like you're trying to get this thing to work, but it's never going to work. It's just falling to pieces. And it's either death by 1,000 cuts and you just drag it out for years, or you have to have some serious conversations and you move into this then team of employed people. And this would be then your dream team. So the dream team is basically they're employed, they work hard, and you probably have to trade off because you've not got loads of money. But they're professionals. They come in at a certain time. They take their holiday. You have a HR department, but it's up to probably like a dozen people. It's the dream team, and it becomes more of a business. And the idea here of having operating procedures and onboarding processes and staff handbooks is like a must. You know, you like need it there. Whereas here, people are like, "Oh, I'm not following a process." You know, we're all mates, etc.
Where did that come from?
Yeah, exactly. Where did that come from? Yeah, that's your dream team, and then you can run that up to a level, and you can scale it up, and you can bring managers in, things like that. And then it depends what you want to do. Because I'm a big believer in having done the big team thing. If you want to scratch your itch and your ego, and you need to be an empire builder, and you need to have the head office and the branded vans, and you've just got to do it. I could say everything's trying to sort you out of it. I could tell you your legs are going to fall off, but you still do it because you need to scratch the itch. If you want to do it for a good life and to make money, the reality is you want to just have a really small... I record a podcast the other day called how to make £2 million profit a year from 4 employees. So I've got 3 businesses, 1 cash flow, 1 profit, 1 asset. If you add them together, they make £2 million profit across the 3, and they're run by 4 part-time employees. And you just think, how is that possible when you've got other people with 40 team members? They're not even making £100,000 profit.
Yeah.
So it's like, it depends where you want to get to, but I would say it's moving through the gears. And every board I've ever sat on, every company I've ever advised, where they've said we want to go from whatever it is in units, 500,000 to 3 million, or we want to go from a team of 10 to a team of 30. I said, I can show you how to do it. I can teach you how to do it. But one thing is, I guarantee every single person that you've currently got will leave. And they're like, yeah, I've heard you say it before, but it won't happen to us. And every single one, without fail, they've left. Every team member will leave. We call it shedding the skin. Like if a crab wants to grow or a snake wants to grow, it has to shed its skin. For a business businesses don't grow in a linear sense. They don't grow up and up and up. They grow in a cyclical nature. So like a piece of elastic, you have to stretch it, it becomes broken, you regroup, shed the skin, rebuild, and then you go again. But every time you do that, you and your business partner or the other founder will be the only one that's left. Everybody else will eventually get outgrown. And you're probably sitting there thinking, yeah, but I know these guys won't. The ones you're thinking of, I guarantee you, I'll be here in 3 years' time and they will. Yeah. And they'll say they're not going to go. They love it. They can't wait to do the journey. We're behind you all the way.
Yeah.
When go and get stuff, like the staff get going.
Yeah, we've definitely been on a journey in our business. So we've grown, I think it's got 32 across the companies now. So it's just at that point where you go, we need, how do you improve the structure and process?
30 is the danger zone. So like Daniel Priestley was the guy that taught me about step changing.
Yeah.
And he says like up to 13 is the sweet spot, but crossing the desert is 13 to 50. And at 30, we got multi-net to 42, I think, or 44. And it's like, it's too big to be small, but it's too small to be big. Like the next sweet spot is a 7-figure board of 6-figure executives, where you've got 50 people.
Yeah.
And those board members, finance, ops, sales and marketing, with you either in an MD role or chairman role above, that's the next sweet spot.
Yeah.
The damage up to there is you've got all these overheads and you need a HR function. You need, it might not apply to your business, but that was my
you're right. So yeah, that's the battle in my mind, because I don't even know if it's ego, it's just like that I have to go and do this. Like, do you know what I mean? But my business partner, Dean, in one of the companies, is like, why do you want to do that? We could just like literally invest in all this property stuff and build out the portfolio and work 2 days a week and have a nice life. And I'm like, yeah, we can do that as well. But so we're kind of working through it together. Like we're very methodical. I feel very methodical in my approach. So we'll never do anything that hopefully will have a detrimental or negative impact on the businesses. So it's like, what if, or where could we be? So it's more like at the moment, it's very like strategic planning. So I've never really done any mentoring before. It's all just been like reading and rubbing shoulders to the right people and learning and then trial and error. But now I'm at a point where I really like investing in myself and the team. So like got the partners on.
Corporate entrepreneurial will be a game changer for you. When you get that framework, it will really create clarity. And I think for deciding, especially if you've got, I wouldn't say friction, but you've got different views of what, or you're both considering different options of like what the future could look like. A good way to do it is to write down like your 3 objectives and just be like, what are the 3 things we're trying to achieve? And then put them in priority order.
Yeah.
Because if number 1 is to make money, it's like more revenue doesn't mean more profit. More revenue means more headache, more HR issues, more noise. Yeah. And the reality is, like, you'll run out of energy in that space. It doesn't matter how hard you push, it'll get harder, it'll get heavier, it'll get more difficult.
Yeah.
So have you ever heard the concept of crossing the desert before?
No.
So crossing the desert is basically, you started at a dozen people and it was lovely, it was great, your brother worked with you, you're probably making cream in it, making loads of money. And over this side, when you've got 50 employees and you've got a board of directors, it's going to be happy days. But you're going to go through, Seth Godin calls it the dip. It means you've got to go down to go up. And you go into the dip and you're going to cross the desert with your water on your back. And the reality is, you can only get so far, and then you've got the option to run back. And then you get to the point where you've got so far, it doesn't matter which way you go now, you've got to run out of water. But eventually, if you don't get to the other side or go back, you run out of water, which could be your energy, it could be your money, it could be your youth, it could be your health, your enthusiasm. And this thing could, eat you alive. And it's just getting it done quick. It's like in and out. I thought crossing the desert would take me 1 year, and it took me 3 years. And I wouldn't say I ever really completed it.
It's really interesting. Yeah.
Yeah.
Sorry, go on.
No, that's really cool, that is. So if you could go back to being 20 years old today,
Yeah.
what would you do differently? And do you have any regrets?
I don't know how many regrets. I get asked that a lot. I would say there's things that I definitely wouldn't do again. There's been versions of me that I look back on quite unfavourably. Like, I wouldn't say I'm embarrassed, but I'm like, I wouldn't go for a beer with that guy. I'm like, when I was younger, I've worked a lot on myself and who I want to be and who I actually am, sort of thing. And I would say, like Joel was saying earlier, my health, like without a doubt, I did fast growth entrepreneurship at the expense of my health. Like, I ran marathons and I trained at the gym, but I just burnt the candle at both ends. It was like work hard Monday to Friday, party all weekend. And it's like a decade of that. I think I've probably done some damage, or I'm trying to like repair it now. So I was saying, if hindsight, and the good thing is, your generation, we're the end of like the binge drinking culture of like, you don't see on the front page of every headline like people asleep, like collapsing in gutters every weekend.
But Will joined us. He didn't drink for the first year, and everyone was like, "Why are you not drinking?" And he's like, "I don't drink." And we're like, it took a while, and it actually people started thinking different. I said, when I was 22, I was like uni, and I was doing this. So very different generation for sure.
I think that's good though, because it's like health and fitness seems to be more objective. We've all got like fit tech stuff we're wearing. One of my mates is a pilot, and he says like 8 out of 10 air stewardesses, whether that's male and female, they just don't drink. It's like the new generation just don't drink. It's probably because they've seen what a mess we've made of ourselves. And like, so I would say I'll look after that, but I think you probably have that in hand anyway. What was the question? Was it mistakes or
regrets? And what would you change if you could be 20, knowing what you know now? What would you do differently? You go down a different path, set up different businesses, invest more, invest less?
Yeah, probably not. I think the thing that I did was I went for the top line before the bottom line. So like I was saying to Will, probably under the radar, trying to talk him out of it. Like, I was more interested in the entrepreneur's journey. I wanted the empire builder. I wanted the growth experience. So I chased the top line. We were doing millions in revenue and doing like next to no profit, and for maybe 10 years, because every single penny I invested, probably 95% of the money we used to grow our companies was our own money. So it was like, I rolled everything up. I've had a 50 grand salary for 2 decades, or whenever the first time I started paying myself. I've never paid myself more than 50 grand salary, apart from once I had to do it to get a mortgage. I went for that journey, but then the offshore was, it's very easy to make £1 million a year or £2 million a year when you're doing £5 million worth of business. Whereas if you were focused on the profit and you're looking at the margin, obviously the growth of the top line is going to be a bit slower. So if you want to make money, I would do it the other way around. I would have just focused on wealth creation. Like I said earlier, go and live with your parents, live with a mate, bottom down your overheads and just cream it. I reckon you can make £1 million equity of 6-figure income from a standing start in 3 years now, if you used our blueprint. Whereas it probably took me 15 years to make my first million, but then within another 12 months, we was into like multiple 7 figures. I wouldn't change it because I loved it and I did it for that. But if I was in your shoes and you just want to make money, there's smarter ways to make money than that, really. And you'll learn about all this on the blueprint.
Awesome. Look forward to it.
Yeah, nice.
You bought and sold or been involved in selling 40 plus businesses. What advice would you give entrepreneurs who are looking to sell their business?
So one would be start with the seller in mind. So the story that I saw all the time in the lettings agencies was people say, oh, I'm going to sell, but I want to sell in 3 years because I want to rebrand, I want to put a new system in. And they waste three years and 100 grand doing all that stuff. And then they come and get gobbled up by Leaders or Countrywide or Sequence if they're still around. And all they want is the book. So it's like, you could have sold 3 years ago, you saved yourself 3 years and 100 grand.
Yeah.
So it's like really understanding who you're selling to. So the second is like understand where the value is. So if it was in your letting agency, it would be in the management contracts. So there would be a big difference between a 12-month notice period and a 30-day notice period for your clients. And it's looking at where is the value created. Like when I used to do build to sell apartments, we would deliberately do 90-year leases because we could then sell the freehold to a pension fund. Whereas if they were and I would get 15 times revenue. Whereas if it was a 990 time lease and I was trying to sell it, I would get like 3 times revenues. It's just really understanding the game and thinking about when you come to sell, who are you going to sell to? And normally it would either be a trade buyer, so like somebody that is in your industry that is going to vertically integrate, horizontally integrate, somebody that's already active in that space, like another letting agency, something like that. Or it would be an investor who just wants an armchair investment. You know, if you say, if you would say you're going to sell this for whatever, 100 grand, 10 million quid, whatever you're going to sell it for, but it's already running on rails, it's a business in a box, and they're just going to buy it and it sits on their portfolio, that would be your investors. Or the other one would be strategic acquisitions and competitors. So it's like thinking about who you're going to sell to, why they're going to want to buy it, and then where the value is. That would probably be the main thing. And also being realistic with when it's ready to sell. And that sometimes it means you've got to do the work. You know, you can't sell something that's not ready because it's just not going to be worth anything. But equally, if somebody's just buying the book, they're just buying the books. Don't waste your time on branding and stuff like that.
Maybe people can do more damage by putting their business on the market before it's even ready or even knowing who could potentially buy it, right? So from that, I'm taking like, okay, go and find out who the potential buyers are, speak to them, what they're looking for, what's important to them now, and then kind of maybe building a business.
Yeah, we call it build to sell. So I think that's how we end up starting having a conversation at some point, maybe not. But a lot of calls I get is about people who are thinking about selling. And it's like, really, you'll have that conversation maybe like 2 or 3 years before you sell.
We're looking for like board non-execs, basically, yeah.
My advice in that would have been, it's like, what were we talking about just then?
So basically selling businesses and
build to sell would be finding a buyer or knowing loosely what pool you're going to, and then build it with that in mind. So it's like just to try and avoid that trap that I said about with the other letting agencies. So they would be the main things to consider. And then I actually gave this feedback to one of the companies I advised yesterday, and I said there's 2 dangers. One is you try and sell too soon, and you get impatient and you sell it. Like you can milk a cow forever, but you can only kill it once. And it's like you can't be bothered to do the last 2 miles of the marathon, so you sell too early. The other thing is you wait too long, and most people who sell become motivated. Like, you know, if you had a house to sell and you're a motivated seller, that's not where you want to be. And being a motivated owner of a motivated seller of somebody who owns a business is even worse, because you don't want to be there and you haven't got the energy to keep it going. And it's like you can only fake it for so long. Yeah. So there's a bit of a balancing act there. But yeah, if there's ever any companies you're thinking of you want to sell, let me know what you're thinking. I'll try and direct you as best I can as to how to appraise it.
Yeah, my thought on business is like, I want to build a business that you can sell because you've done something right. So it's a business, it's like performing well, you've got the right teams, the right processes, structure in place. Therefore, a competitor, an investor, trade management buyout, someone wants to buy a business. So we've done something, we built a robust business, and that's like, we don't have to sell it because the business is servicing us, but we've built it in a way that is attractive. That's kind of my looking at it. And then suddenly someone comes along and like, yeah, I'll give you X amount, and if it's serious, you've got to take it seriously. But I think, yes, it's how do we make it better and improve it. I think if you can look at what that looks like from a buyer's point of view, then you then go back. I had someone offer me six figures in my first year for half the business, and I went, okay, let's have a look at this. And I went through 5 meetings with them. I had a room like this. They had a team, and they were asking all these questions. They made me do a presentation several times, and every time they asked me questions and things I didn't have, I just took away and implemented into the business. Yeah. And it was an amazing experience. Although it was very time consuming, I felt exhausted by the end of it. And in the end, I turned around and said no to them. So I said, I feel like the business is worth more than this, and I think I can add the value that needs to be done. But I took a lot away from it. So I went with an open mind to potentially bring on this partner. But that for me is like, right, how do we make the business even better? So what do buyers need? So,
yeah, that sort of strategic thinking is like going to be really valuable through this process for you as well, because it's like you want to think like really pragmatically about it's like, what is it that we're selling? Because some business is not worth anything. It's like
we looked in our mortgage business, right? So 3 of the directors bring in X amount, 7 figures a year, and then who would buy that? Because it's 3 directors bringing in the money. But then even if you've got the team behind it, it's like, how is it? What are they actually buying? Letting there's a book there. Then we looked at wealth management. Obviously, you've got 10, 20, 50 million under management. That is recurring income. You can replace directors or advisors for someone else, so you can keep a team in there. So it was that in regard, we looked at that where what would a business be worth, and potentially it's kind of hard to realize, it could be actually worth nothing.
Yeah, exactly.
Rightly.
Like, people can't spend all the time with rent-to-rent businesses. They're like, I've got a rent-to-rent business, I want to sell, and it's like, they're like, how much is it? I want £500,000 for it. I'm like, how much profit are you making? They're like, 90 grand a year. I'm like, how much is left on the leases? And they're like, between 1 and 3 years. I'm like, right, so you've got between, let's say it was 100k, between 1 and 300k profit if everything goes to plan, and you want 500k. It's like, it doesn't make sense. Whereas a lettings book, where you've got 12-month notices, clients that have been with you 3 or 4 years, single lets that don't have any churn, landlords will never move unless you really upset them. Selling that for 5, 6 times, 8 times EBITDA, depends what your profitability is, 1 to 2 times revenue. I could sell it probably before, if I made a call from the top of this flight, this building here, I could probably sell it for you by the time I get to the bottom. It's like people are queuing up to buy them because they're very tradable.
Yeah, okay, that's interesting. Food for thought there, I think.
Definitely.
Last one for me, Momentum Invest. This is what the podcast is called, Momentum Invest, Accelerated Growth Podcast. What does momentum mean to you, Daniel, for your personal life, for business? How do you approach it? Do you think it's important?
Momentum.
Yeah.
I said momentum's really good. And the quote that sticks with me is Donald Trump, whatever you think of him, as an entrepreneur, 10 years ago, at the Success, what's that training group called? They bring like Tony Robbins in and stuff like that. Success, something or other. Can't remember. Some big training event I went to, and Donald Trump was speaking there. And he said, somebody said, like, what's the biggest mistake entrepreneurs can make? And he said, stop. He said, stop him. So the biggest mistake entrepreneurs do is stop. They work really hard. They go on holiday they take 3 weeks off. And then they wonder why they can't get going again. It's like momentum is like the most valuable thing. And it's like, I would say, if you can stay in the middle lane and keep that momentum going, you're unbeatable. The reality is some people are slow and they dip in and out. Others like me would burn themselves to a crisp, stop for a week, and then wonder why the first week of January after Christmas, we actually teach our property entrepreneurs in the gap between Christmas and New Year to do something, do some journaling, go to the office, clear your desk, just keep that momentum going. Because if you take your foot off the accelerator and put your feet up and eat Doritos and matchsticks for 2 weeks, you're hungover, you're fat, you're out of shape, and you turn up on the first day with all these New Year's plans, and you're like, oh, it's been a long day, it's 2 o'clock, should we call it?
Yeah.
And it's just so true, isn't it? So that's what momentum means to me, is like the inertia of it.
Yeah, that's really good. Well, I think that's good.
Yeah, that's great. Thanks
Cool.
for coming on.
Well, thank you very much, Joel. Pleasure.
Thank you.
Thank you, gentlemen.
Yes, thank you, Daniel.
Enjoyed that.
This podcast was brought to you by Ramsey & White Finance and Property Investors. We specialise in helping property investors fund their deals all across the UK. We also have Ramsey & White Wealth Management, Accountancy and Ramsey & White Estate Agents. I want to say a huge thank you to our sponsors, TS3 Capital, who specialise in bridging and helping clients momentum invest by putting the right finance in place for their projects.